Good evening, investors. In today's episode, first we will be doing overall market analysis and then we will be discussing some interesting developments happening across different sectors and different stocks. Before discussing today's market performance, if you are aware, earlier US President Donald Trump was in full mood of trade war against India because we were buying Russian oil. But last week we have seen a sudden U-turn from his side. Last week he posted from his social media account that now he is looking forward to make favorable trade negotiations with India. Now, is it because he is afraid of increasing close relations between China, India and Russia or anything else? Let's not go there. But from overall market perspective, after his post, markets have reacted positively, but we have not seen that which we can call a good momentum. Today also, we have noticed a very flat market. Nifty was down 44.8 points, that is 0.18%. However, small cap and mid cap have outperformed Nifty. Small cap was 0.76% up and mid cap was 0.44% up. Now it is apparently very clear that two factors which can now give a good push to markets are: number one, a good Q2 earnings from Indian companies, and number two, a good outcome from India-US trade deal. The good thing for us as of now is that FIIs have reduced their selling momentum. However, at the time of recording this video, I don't have access to today's FII DII buy-sell data. But talking of September, till date, FIIs have sold 9,200 crores of Indian equities. Now, if I compare it to previous month, then in August it was 46,900 crore sale and in July it was 47,666 crore sale. In September, we have not seen that much pressure. However, 15 days are still left. So let's wait and see how this goes. Now the all eyes are on upcoming US Fed rate cut decisions. Now the market is expecting rate cuts. Why I am saying so? Let me show you with data. Now this is US bond yields data. Now how to interpret it with reference to rate cuts? Let me show you. This is 1 month yield, which is 4.157. This is 3 month yield, which is 4.035, and this is 1 year yield, that is 3.664. Now you notice that 3 month yield is less than 1 month yield and 1 year yield is less than 3 month yield. This means that market is expecting a rate cut between 1 month and 3 months time period and expecting another rate cut between 3 month to 1 year period. Now historically it has been seen whenever rate cut happens, it weakens dollar and promotes FIIs to invest in emerging markets. Now as we can see from this table that currently other emerging markets are trading at a cheaper valuation compared to India. However, still a good Q2 earnings can make our Nifty attractive. So long story short, market is highly dependent on Q2 earnings and US trade deal outcome. Now that doesn't mean that market won't rise till that period or will stay flat, but it will be in a sideways mode. A clear direction will be after the outcome of these two events. Now coming to some interesting developments that happened today, and the first sector which was in limelight today was data center. Why? Because government has proposed new policies to promote data center investment in India, and biggest one is 20-year income tax relief for data center income. Now I have earlier attended con call of a company called Techno Electric and Engineering Company Limited. It is also entering into data center business. I believe by Q3 they will start reporting revenue under data center business. Now in their con call, if I show you, they have mentioned that data center is a high EBITDA margin business. They have mentioned that rental EBITDA from data center is 80%, which is very high. Now high margins plus income tax relief, this can give a huge earning boost to those companies which are entering into data center industry. Now today, Anant Raj, again one of the data center stock. However, it is a real estate player entering into data center business. This was 10.46% up. Railtel Corporation, again 6.67% up. GE Vernova T&D, they provide electrical and power equipments for data center. It was 1.97% up. Now since I try to keep daily analysis videos short, so what I am planning is that on weekend I will make a deep dive video into data center segment, full value chain analysis, peer-to-peer analysis, who are the players in this business, what are they doing, and then we will discuss in detail in that video. Now let's get back to some another important announcement related to data center investment policies. Earlier there was no clear guidelines on how to utilize GST on capital equipments used to run data center. Now government is proposing to allow full utilization of GST credit that will improve the working capital of the companies. Also there are other rules as well. For example, allocation of land at concessional rates, uninterrupted power supply. And kindly note that these are proposed policies, not yet fully implemented or announced. So we have to wait for the final policy. Coming to another sector which has again come to limelight is defense sector. Why? Because of the new procurement policy announced by government. Now what is the major limelight of this policy? The biggest change is that earlier payments were delayed. Why? Because approvals were required to be taken from various level of authorities, and that led to working capital problem for various defense companies. For example, if you look at Paras Defense and Space Technologies, if I show you here, you can see cash conversion cycle is 501 days. That means your cash is blocked for 501 days. Another stock, Apollo Microsystems, if I show you its cash conversion cycle, then it is 450 days. That means cash is being blocked for 450 days. Another stock, Astra Microwave Products. If I show you cash conversion cycle of this stock, again it is around 614 days. Now as per new policy, lower authorities will be able to approve payments, so payments will be faster and working capital cost will be saved in defense companies. Another major change is that currently these companies are 8 defense public sector undertaking that we call as DPSUs. 8 DPSUs currently we have in India, and if suppose armed forces have to buy any equipment apart from these 8 DPSUs, then they have to take no objection certificate and various approvals from these companies, which was a very long process. Apart from that, earlier also we were focusing on Make in India in defense space, and now more push will be given to that. Another sector which was in limelight today was railways. RVNL, IRCON, Jupiter Wagons, all of them have bagged new orders. Government has announced projects worth rupees 77,000 crores in the northeast, and also further projects in Manipur worth 8,500 crores. Now I believe in case of railways, order book is not a problem. They are flooded with order book, but the real problem is execution. For example, if I talk of RVNL, for 2025 they have given a guidance of 24,000 crores. However, they executed only 19,000 crores. Now if we talk about say Titagarh rail system, again same problem, flat revenues. Why? Because there was a wheel shortage from government side that led to delay in execution. That's why order book is very high of all the railway stock, but the real problem is in execution. Every time these stock react very positively on the news of order book or a capital expansion plan in railways, but the real problem is in execution. Whenever the earnings are out for these stocks, earnings are not as per the order book size. Also, one more disclaimer, the stock which I have been discussing in this video are not a buy sell recommendation. We are just trying to discuss the developments which are happening in our market. If you want to make any buy or sell decision, then please do first your own research, or you can consult your financial advisor. Now at the last, we will discuss one more stock, that is Cupid Limited. Why are we discussing this stock? First, this stock is making new highs, and despite of making new highs, that is the stock is trading at an all-time high, still promoters are increasing their stake in this stock. As you can see, their promoter Aditya Halvasia has acquired 10 lakh shares and has increased his stake to 30.3%. Earlier his stake was almost 29.53%, so it's a 0.8% increase, and that too when stock is at an all-time high. Now for those who don't know, Cupid is in business of manufacturing condoms for male and female and also other health products, but their 75 to 80% revenue comes from manufacturing of condoms only. They export it as well, plus they make condoms for institutions as well as for government as well and for other players as well. For example, they just manufacture condom and other players put brand over their product. Now the real question is why the stock price is continuously rising. In April it was 60. In September, within the time period of 5 months, it has increased by 3x. If you see the revenue or results, then it's not that impressive. Then why the stock is increasing? Now first thing, when promoter is buying, then it is very clear. he knows something that we don't know. So there is some insider information that he is very confident of that can like increase the revenue in the upcoming quarter. So this can be the first reason. The another reason why market is bullish, let me show you. This is their last quarter investor presentation. If you see that currently their existing capacity is manufacturing 1 lakh kits per day, which is expected to be increased 4 times by the end of 2026, that is 4 lakh kits per day. So market is expecting a multi-fold revenue in this stock in the coming 2 years. But one should be careful about its valuations. Currently its PE is 117. At 117 PE, stock has to post a very good result, otherwise it will be beaten down badly by the market. But now again you will say Arpan, promoters are buying, so they are confident. Yes, they are buying, they are confident, but you don't know future. Since if you and if you enter at this stock, then there is a possibility of you being trapped. So again, it is not a buy or sell recommendation. Just whenever you study, please keep in mind these factors. Also, if you notice, institutional holding is very less. FIIs are having 0.95% stake in the company, DIIs are having 0.11% stake in the company, so stock can be manipulated as well. Also, cash conversion cycle is also very high, 570 days. Cash is stuck for 570 days. So these are the red flags which when you start studying this stock you should keep in mind. So that's it for today, investors. I will meet you tomorrow. Take care.